Okay, good morning, everybody. I am here with Sarah Perkins from Blue Water Credit, and I'm so excited to have her on today. We are going to be talking about all things credit and just things you guys might want to know about credit in relation to buying a home, but also just in general. I think there's, common mistakes that us as consumers might make with our credit. And so Sarah's here to guide us today to give us some information on how we can maybe clean up our credit, things to avoid with our credit, and then ways to improve our credit. And so we're going to be chatting with her this morning. So Sarah, why don't you just tell us a little bit about Blue Water Credit? I know that I met Jeff, the owner, years ago, and so that's how we know each other. And just tell us about the company and just what you guys do, what you specialize in, and maybe how you're different from other credit repair companies.
Yeah, of course. And first of all, thank you for having me this morning. But yeah, Blue Water Credit, we're out of the Sacramento area. We've been around for about 15 years. We've probably helped over 15,000 clients now in our time that we have been open. We like to think of ourselves as the legal and ethical credit repair company, because unfortunately with our industry, we know that there's sometimes a stigma that goes with credit repair and, how things are done. And so we really pride ourselves on making sure that we do things, the right way. We are the only accredited credit repair company with the BBB. We have an A+ rating, plus we're the top rated on Google and Yelp. And it's just a testament, I think, to the services that we provide our clients and the referral partners that we work with, like yourself.
Awesome. Thanks for sharing that. Yeah, I know you guys have good reviews. So tell us, I guess let's start off with, like how credit scores are calculated. I know that one of the questions we get asked a lot with buyers is, oh, I don't want to get a second opinion for the lender, for my loan, because I'm worried it's going to damage my credit. So is that an accurate statement, or is there, is that not truthful? And then, how are the credit scores calculated?
Yeah, well, with pulling the credit, you do have a 30-day window shop when you are doing something with mortgage or purchasing a car. So it only is going to count as one inquiry, and inquiries are actually a really small portion of someone's credit score. It probably can only affect a score anywhere from 1 to 5 points. The number one category that affects credit scores is going to be derogatory accounts. So those are going to be paying your current creditors late. Having a 30, 60, 90-day late is going to be very damaging. Collections, medical debt, charge-off cards. So any one of those things can drag a score down, anywhere from like 80 to 100 points. So I've seen one person have just one small medical account for $25 and score dropped 80 points. So, that's huge. And then the next biggest category besides that is utilization. So that's, comparing what your balances are to the limits that you hold on the credit card. So I know a lot of people used to say the good rule of thumb is something like 30% or less, but we do see that you do get an extra bump in your score if you can keep it between 1 and 10%. So a lot of people want to pay off their credit cards, but actually it's good to keep somewhat of a small balance on there if you're looking to maximize your score. So if you're not really worried about maximizing your score, pay those off. But then if you're getting ready to do some shopping and where credit's going to matter, then you may want to put like a cup of coffee on it from Starbucks and carry a balance for a little bit.
Okay, thanks for sharing that. And then what are like some new or recent credit or recent updates pertaining to credit from 2023? Are there things that are new that are maybe some updates that our viewers might want to know about?
Yeah, so one of the big things that happened, and it actually started last year, has to do with medical debt. So which is a big one. And like I said, the lady I just spoke about where her score dropped, 180 to 100 points because of one medical debt, that's huge. And so what they changed with medical debts, and this is for all the bureaus, is now any paid medical collections no longer will report on a credit report. So it used to be that collection agency, even though that they paid it off, they can still keep it there with a zero balance and just reporting it as paid, which still does have a negative effect on the score. Not as bad as if it's carrying a balance, but now that these items have to be deleted, that was huge. And so that started last year. Another thing that goes along with that is that they weren't allowed to even report to someone's credit now for 12 months. So the old rule used to be a 6-month waiting period. And then after that, the provider can send it off to a collection agency, and then they were allowed to report it on your credit bureau. So now that time has been extended to 12 months, which kind of gives the consumer a little bit more time to maybe work with their provider, the collection agency, to work out a payment plan before it affects their credit. And then lastly, we just saw it roll out in the last couple months, and this is kind of the last phase of it, is any medical accounts with a balance of $500 or less is now no longer allowed to be reported on a credit bureau. So it has to be in excess of $500 to actually report on the credit. So if you are seeing those kind of things, paid medical collections or medical collections that are under $500, you can definitely reach out to us. Those are the type of things that we can help get off.
Okay, and you can help people clear those off their record. Okay. And then for people, let's say that are, I had a client who their credit cards were stolen from her car, and then somebody charged all this stuff onto Macy's. And how does somebody go about trying to get that, rectified, would you say?
Yeah. So, identity theft is something that's somewhat on the rise. So usually we tell people, if you're a victim or you worry about identity theft, some of the things you can do is put a freeze on your credit report. You can also order a free credit report through annualcreditreport.com once a week. That was another big change with COVID that happened. So it used to be you can only order one once a year from each of the bureaus. So starting last year, you were able to order a new one every single week. So you can kind of monitor your credit and see what's going on, if, activities happening with someone that did steal your credit cards. And that is going to be good through 2023. It doesn't give you your credit score, but at least you're seeing, the activity on the card. But those are another type of client that we can definitely assist, because it is a lot of work. They put a lot of, responsibility on the consumer to clean it up, and it can be very confusing. Typically, we need like a police report to be filed. There's certain affidavits that can get filled out. Then we can send those off to the bureaus and the creditors. And then right now we have the luxury, after one round of doing that, we've partnered with an attorneys down in Los Angeles who now, if they do not remove those kind of identity theft cases after we make a one round of disputes, they are taking on these clients free of charge and getting these things removed, and also cash rewards back to our clients. And again, that's at no fee to our clients as well.
Wow, that's an awesome service to have.
Yeah.
Absolutely. All right. And then tell me, what are like the top 4 biggest credit mistakes that you've seen people make?
So we kind of touched on one already. So obviously having a derogatory account is going to be number one thing, because that's going to drop your score, like I said, up to like 100 points for just one late payment. So obviously making sure you're making payments on time. That I hit people all the time. Well, I moved, I didn't realize I didn't get the bill. So, ultimately the responsibility falls on the consumer. So I like to tell people, set your stuff up on auto pay, because you want to make sure that you're not getting those derogatory marks, because those are things that are hard to fix, but definitely something that Blue Water Credit can take a look at. The other thing is going to be maxed out credit cards. So like I said, the second biggest category affecting someone's score is utilization. So we'll talk to clients, and, maybe sometimes they don't have the luxury of paying all their credit cards down. So if you're limited on funds, take the credit card that has maybe the lower balance that's maxed out and pay that one down first. Because I tell people a maxed out $500 card is the same as a maxed out $10,000 card. So if you're needing a bump in your credit score, and again, your funds are limited, pay that $500 one down to $50 into that 1 to 10% range. And you're going to definitely see it increase, and then, tackle it from lower balance to higher balance. I know it's kind of counterintuitive to what we hear, like, oh, choose like the highest interest rate one first and pay those down. And that's a good strategy if you're just looking to pay your debt down, like overall in the quickest manner. But if you're concerned with your credit score, then starting with the lower balance one that's maxed out. Limiting inquiries, again, that it only affects your score, 1 to 5 points. But when you then add new accounts based off those inquiries, that can drive a score down, because now you're lowering the average length of time that your credit has been open. So the bureaus like to see, I think, around an average of 6 years when they take all your cards as far as how long they've been open. And ideally, they like your oldest card, like 20 years plus older to, get that coveted, like up in that 800 score. And then the last is closing account. So again, that goes with, if you close an old account, again, you're going to then shorten the length of history that your cards have been open. So it's better to just kind of leave those cards open, use them every once in a while. I actually fell a victim to this. I didn't use my Discover card, which had an amazing balance or credit limit. And I just got notified over the weekend that they closed it down. I'm like, oh man, I didn't listen to my own advice. I should have just put like Netflix or something on there. So I tell people, if you have cards and you don't think about using them that often, just put something that has like a small reoccurring charge on it so you get some activity so they don't close them down on you.
Yeah, that's good advice. I know, because that was one of the things is if you haven't used it for years, like what's the point of keeping it open? And
yeah.
So you're right, if they're looking at that history, and I didn't realize it was for so long, 20
Yeah.
years, or, they're really looking for that long history to get those higher scores. Okay. And then
Yep.
as far as I know, even with mortgage payments on lates, when you're, it's due on the 1st, late on the 15th. So you pay like I want to say, after the 15th, it is a late fee. So do they report typically like on the 16th, or do they have to wait a little bit longer to actually for it to hit on your credit report?
Usually it's when you go the 30 days past due. So I know with mortgage, you might be hit with like a late fee, and then, past the 30th, then that's when they're going to report that 30-day late. But again, every place is different. So if you're concerned and you think maybe you're going to make a late payment because, funds are limited, reach out to that creditor, because everybody's a little bit different on their reporting method. And when they report, some report at the end of the month, some report at the beginning of the month, or maybe they report on a weekly basis. So it's really dependent on that creditor. So, working with that creditor to see when they are reporting, if you are worried about, getting that late, if you're not able to make the payment by the due date.
Okay. Thank you for that advice.
That's
good to know. And then how can someone increase their credit score up to like 50 points if they were just trying to do a few things? I know you said pay down the credit card that has the lowest balance. Are there any other tips of how you can, quickly increase your score? And then I know some of our lenders do like a rapid rescore. Can you talk about that as well?
Yeah. So we touched on the utilization. Obviously, that's huge. Another tip or kind of trick that we will suggest to our clients, if maybe they don't have a lot of history with credit, maybe they only have one credit card, they don't have a mortgage kind of thing, is maybe getting added as an authorized user to somebody's card. Maybe you have a family member or even a friend that will add you onto one of their cards that have been open for a while, but you definitely want to make sure it's a card that's not maxed out, that doesn't have any late payments, because you're essentially inheriting all of their credit history for that specific account. So and also I would check with your lender, because I know sometimes authorized users can count against you. I don't know if like debt to income ratio, if they're like looking at what that payment is. So you always want to talk to your lender of how that might affect you. But if you are looking to try to add some credit history to your account, that's going to maybe help lengthen the amount of time you've had credit open. Getting added as an authorized user is a good option. Other things would be getting a secured card or we have an installment loan. So we have two products that we offer our clients that has a 99% approval rate. So first is a secured credit card, where obviously you put a deposit down and then you use that credit card and you pay it off. So a lot of people get confused, like, well, I put $200 down. Don't they just pull from that to make my payment? Which is not true. So if you're going to open that secured card, make sure you're going to pay it regularly, just like you would with a regular credit card. But what's nice about the one that Blue Water Credit has is it reports to your credit within 7 to 10 business days. So it's pretty quick on getting populated on your credit, where some places they want to see a payment history of about like 6 months before they'll even put it onto your credit. Another option is we have a product with an installment loan, or it looks like an installment loan, something like a car loan or educational loan, how it would appear on your credit. But really, it's a savings account that our clients pay into as little as $15 a month, and it populates on your credit looking like it's an installment loan. And then after a year, you can pull that money out and maybe use it to help with closing costs or something for a purchase of a home. And then lastly, you can always set up a consultation with us. They're always risk-free, and we're going to give everybody advice on action plans of what they can do, even if they don't become clients of ours. So, it doesn't hurt to have us just look over your credit and maybe find some things that you can tweak on there as well. But those would be the major things, the ones I just talked about.
That's awesome. Those are all really good things. And then what would you say the difference is between like my score on Credit Karma versus like the score used for a mortgage? Isn't it the same?
Yeah, so we do get a lot of people that go, well, I already know what my score is. And you guys probably get it in that industry is like, oh, I have Credit Karma. And we always laugh. And, Credit Karma is like the Zillow estimates, of the credit world. So if you're a realtor, you know exactly what I'm talking about. It can be off by a lot. So it can be off by 100 points one way or another. So there are several versions of credit scores that are out there. So Credit Karma, for example, uses a system called the Vantage score. So, and most lenders use the FICO, and it's going to be the FICO model 5. So there's all these different versions out there. It's super confusing, but there's one for bank cards, there's one for auto loans, and all those scores are going to be different. So really the only true place, if you're looking to see what your score is for qualifying for a mortgage, would either be to have your potential lender pull your credit, or you can go to myfico.com. You pay $59 for a one-time pull, or you can sign up for their monitoring service, which I think is about like $30 a month. It doesn't hurt your credit. It's a soft pull that you just pull yourself, but it gives you every imaginable score out there. And so what you're looking for is that category that says mortgage, and it's a FICO 5, 2 or 4, I believe. And then that's an accurate place where you can get your mortgage FICO score. They did just, I think, approve this last year to use a new scoring model, the FICO 10T, and I believe it's the Vantage 4 that can be used for lending now for mortgages. And really, they're kind of looking more at trending data. And what that means is they're really weighing a lot on what the consumer has done in the last 2 years. So they're putting a lot more weight on recent credit history, your credit payments that you've made over the last 2 years. I haven't seen a lot of lenders technically move to that scoring model, but it is one that's out there. But traditionally, it's the FICO 5 that you're looking at. But the ones that they send you through the bank and Credit Karma, you're going to look at the fine print and see what model it is, and most likely it's probably going to be model 8.
Okay. Yeah, there's so many details to that.
I know.
But I can definitely relate to the Zillow, because it's like
my home is worth this, right?
Yeah,
I know.
yeah.
I looked it up online.
Yeah. And it's not a bad starting place, but it can be,
Yeah.
it can be very, not accurate, and really depends on the neighborhood.
Yeah.
So yeah, I can relate to that.
Yeah, because I say with Credit Karma, it's a good tool to monitor your credit. I mean, you're only getting 2 of the bureaus that are reporting on there. But I tell clients when we're like negotiating a debt, or if we're trying to see if something got deleted, it's a good free tool to see when those items fall off. So then that way you can let your lender know to run a new credit report. Like you're going to get an update typically once a week if something happens, and they'll go, hey, congratulations, this account fell off, or this one is now, in a positive status. So it is a good tool to use for like just tracking, some educational things. But as far as scoring, it's not accurate at all.
Okay. Yeah. Good to know, and good that it can tell you when something falls off, because there are clients might be waiting. I was going to ask you something else along those lines. Yeah, because I know that people will come to us and they'll say, oh, well, I don't want the lender to pull my credit. And we're like, well, they can't really do pre-approval without it. Even if you have a credit report in your hand, they really need to pull on their own. And it's good to know, the 30 days you can pull, and it's not going to hurt your credit. They think sometimes, if I get a second opinion, it'll hurt my credit. And so we just, it's good to have.
And I've heard a lot of lenders speaking to them lately that have been having the ability to do like soft pulls, like just a soft pull and actually getting like the mortgage score. So again, talk to your lender if that's an option, if you're worried about it affecting your score, or maybe you're not quite ready, but you kind of want to see where you're at. So maybe you're not going to do a lot of shopping in the next 30 days, ask your lender if they have the ability to pull, a soft pull on your credit.
Yeah, that's good advice. Okay. And then last question, like who is a good candidate for credit repair? And then how can our viewers reach you guys?
Okay. Yeah. So good candidates for credit repair are going to be those that have the derogatory items, like I talked about earlier, the late payments, collection accounts, charge-off accounts, medical debt that might still be reporting, public records like bankruptcy. Those are the kind of things that we can help by opening a dispute investigation with the bureaus. We have lots of different tactics and methods that we use in communicating with the bureaus and the creditors that maybe a consumer, if they went online themselves, wouldn't know how to, properly dispute an account, because technically, they are not supposed to remove information unless it's inaccurate, erroneous. And so we can pinpoint those kind of things on a credit report that might not be reporting correctly and be able to get those things removed on a technicality or for the fact that they just don't respond to our disputes. So other clients, because we do also do debt settlement. So if you have collection accounts or charge off accounts, or maybe holding your score down, or maybe your underwriter saying, hey, you need to take care of this collection and pay it off. What I do with Blue Water Credit is I do all the debt settlement and debt negotiations. So I've been doing that for 10 years. I actually have 20 years in credit and collection. I was in collections for 10 years and then transitioned over to debt settlement. So I've quite a Rolodex of contacts of every bank you can think of, every collection agency, every debt buyer. I know who will settle for what, who will give you a deletion letter. I know you talked about rapid rescore. Sometimes those deletion letters that we get after settling, your lender can use to redo your score without waiting for the item to actually fall off your credit. So those kind of letters I can get, and I can let you know with that particular creditor if they're one that will give a deletion letter. But it always just starts with a risk-free consultation. Those are about 15 minutes. We either need to have your credit report that your lender has pulled that you're able to share with us, or we'll walk you through pulling your own. One of our credit advisors is going to go through it, give you suggestions, like I said, action plans of things that you can do on your own. And then if you're a good candidate for our program, we'll talk about pricing then. And the nice thing is if you do enroll, you get assigned to a specific case manager. It's not a call center experience. You're working one-on-one with a person. Unless you're doing debt settlement, you might have two people. But yeah, you have one person that you're in contact with. You have a portal that you have access to what we're disputing, what has been deleted. And then we're working with your lender or your real estate agent, keeping them up to date and letting them know also when, you're ready to have new credit pulled. So on average, our clients are with us about 4 to 6 months, but again, it's really all dependent on, what their credit situation is coming in. We had someone just last week that had, I think, like 17 derogatory items that we were able to get off in 30 days. So, things like that can happen. And so it just doesn't hurt. It doesn't cost anything to just have us take a look at your credit and, give you some advice.
Yeah, awesome. Well, that's all great info, and we'll definitely keep you posted as we have more clients that need your help, and that would help them to get into a home sooner, or just people that, maybe are already homeowners that are just looking to clean up their credit. So
yes.
Thank you so much for being here. And your guys' website, do you want to just mention what that is?
Yeah, so super simple. It's bluewatercredit.com. So on there, you can schedule a consultation. We have lots of great information. We have charts and stuff that show you, how a credit score is calculated. So there's a lot of great information on there for consumers, for lenders, for real estate partners. But yeah, bluewatercredit.com would be the best place to start.
Okay, perfect. Thank you, Sarah, for being here. And yeah, it's good to see you.
Yeah, thank you.
Okay, have a great day.
All right.
Bye.
Bye.